Continuing with our 2014 Outlook coverage, we have a special edition of Technically Speaking with Jim Wyckoff. We'll be covering some of the data that came out today, potential taper and potential budget deal coming up. And joining me now is Jim Wyckoff. Jim, how are you?
Hello, Alex. Good to see you.
So Jim, early morning trading saw gold down, then we had the economic data coming out, which was positive for the U.S. What did this do to gold prices today?
Alex, what we saw in overnight trading was just a continued lack of bullish fundamental inputs that allowed the technical sellers, the bears, to take over and push prices solidly lower. The overall technical posture of the gold and silver markets remains solidly in the bearish camp.
Of course, we have the FOMC meeting next week. The word of what seems like forever, taper, is always being mentioned. What do you expect coming out of the meetings, and what, if they do taper, what could this do to the price of gold?
Alex, I think the much talked about for many weeks or even months, tapering is going to have a insignificant impact on many markets, including the precious metals, going forward. The fact is, we have factored a tapering, whether it occurs in December or the first quarter of 2014. That's been factored into the marketplace and going to have a minimal impact on prices.
And of course, we also have the potential budget deal that could be struck by U.S. government before the year closes out. Should they reach an accord for this deal, what could that mean for gold prices moving forward?
Well, Alex, I think it can partly be attributed to the weakness in gold that we see Thursday. The budget agreement takes away an uncertain element from the marketplace that just a few months ago really roiled the marketplace and shut the U.S. government down. The fact that the Republicans and Democrats have come together to at least reach an initial agreement is a somewhat calming factor, or at least takes away an uncertainty from the marketplace.
All right, good stuff. Jim, let's move on to your Wyckoff market ratings for gold and silver.
Alex, I'm giving both gold and silver a rating of 2.5. That's firmly in the bearish camp. We did see some upside short covering movement in prices the past or earlier this week, but that was quickly negated with Thursday's downside price action.
All right, how about resistance and support levels?
Alex, for near-term technical support for February gold is located at 1,200. Solid technical resistance is located at this week's high of 1267.50. Technical support for March silver is located at last week's low of 1889, and overhead technical resistance is at $21.
All right, Jim, let's move into our 2014 Outlook that you're kindly taking part in. You put out two great pieces last week and one fresh this week. Let's start with your gold bulls must defend on 3 critical price points in 2014 to avoid catastrophe. What are these 3 critical price points you allude to?
Alex, the longer-term price trend in gold is down at present, as evidenced by the monthly chart that I showed readers on Kitco. There are 3 important longer-term technical support levels that need to be defended by the bulls to avoid really serious technical damage that could push prices to $1,000 or below if they are breached. The first longer-term chart support level is the 2013 low of 1179. Following that is trendline support at 1100. And then below that is 1089, which is probably the most important number. That is a 50% Fibonacci retracement of the price move from the 2001 low to the record high we saw a couple years ago.
And you also have a second silver piece, which is fresh this morning. Silver bulls taking a beating and need to come out swinging in 2014. You want to elaborate on that a bit?
Alex, the silver bears are in full longer-term technical command also. If we do see some longer-term technical support levels taken out on the downside, you could see some serious downside price pressure in silver in 2014. including $15 or even $10 an ounce. So we do need to have the bulls really step up in the first quarter of 2014 to right their ship.
And to close out, we are asking all our experts what they think about the big performer next year. Will it be gold? Will it be silver? What do you think?
Well, I don't have a strong opinion on that, Alex, but if I had to guess, I would guess, gold is the leader. We've seen a very quiet geopolitical front the past few months, and I suspect that's going to change in 2014 just because history shows it will. So I suspect that if we do have some geopolitical uncertainty develop, that's gonna move the safe haven gold market.
Excellent stuff, Jim. Always great talking to you.
All right, Alex. Can't wait till next time.
And thank you for tuning in to our Outlook 2014 coverage. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com, or you can ask me on Twitter @Alex_Letourneau. Have a good one.